All right, what's going on, family? This is Paul McMillan II, and welcome to another backtesting session. It is a little bit after 10 o'clock, and it's Thursday, May 26, 2022. So we're going to actually do a backtesting on NAS100. This is one of my favorite indice pairs. So whenever I am trading, the very first thing I do is mark up market structure from the 15-minute to the 4-hour time frame. So what I'm going to do is go back as far as I can in price, and then I'm going to go and then we're going to start marking up the market structure. So I'm going to do that real quick and then resume this recording. Be right back. All right, so this is as far back as price goes. So then what I do is I put a vertical line, okay? Then I start marking up market structure based off of support and resistance that has areas of huge liquidity and imbalance moves in the market. So you look here, you can see that the institutions were actually respecting this support quite a few times, and that's what made price spring up, test the support again, and then push price all the way up to here. Okay, so this is a very, very good support and resistance line. Here you can kind of see that as well. You can see that right here. That's what made price just shoot on down to this next zone. You can kind of actually see it here, and then up to here. Okay. Now, next thing I do is basically draw zones off of these horizontal lines. All right. Let me make sure I turn this video down just a little bit more. There we go. So I'm marking up these areas. So now that we marked up the 15-minute time frame, we are going to move over to the 30-minute time frame, okay? And do the same exact thing. All right, and as you can see, this is the vertical line I drew before. All right, so now what we're going to do is I'm going to put a vertical line here. I have one right here. And then I'm going to put one down here. Put one there. All right. And so then the very next thing I'm going to do is go to the 1 hour and basically start off where we left off at. So right here, put a vertical line, say right here, and then start marking up market structure on the 1 hour. Make this red. I put one down here, one down there. And then we're going to draw zones off of there. Right. So now we mark that up. Now we're going to move on to the 4-hour time frame. Now, as you can see, this is where we basically marked up everything. We're going to go all the way to current price. And so then we're going to actually draw just a zone down here, make it as thin as possible. We're going to make this purple. All right. Now that we've done that, we're going to move back to the 15-minute time frame. All right. And then when I get to the next step, we're going to identify the trend. Now, really in reality, if I'm looking at the RSI, and if I'm looking at the trend here, it looks like price is pretty much overall bullish. So I could just draw, so I'll just draw a trend line here. Even though technically it could look bearish from this point because you see price gathering a lot of liquidity in this area, and you could conclude that it might start to sell here, but it looks like it's overall bullish. So at this point, I'm just going to put overall bullish. So I'm going to put bearish trend line, okay? Bullish trend line. All right. I'm going to put that. Now, actually, I'm going to push that over here. Push that over here, put that right here. Perfect. Right. Now, the very next thing I'm going to do is I'm going to turn on the order block indicator. Okay. I'm sorry, I'm going to turn on the higher high and lower low strategy indicator. This is where I figure out the most recent high to what current price is at, and the most recent low. That way I'm able to draw my break and retest lines, which I call the X factor lines. So this is the most recent high here for current price here. And then I would say the most recent low, probably right here. And that's what I would say. That's not true. All right. So now that I have done that, then that's when I'm going to turn on the order block indicator. Now, once I turn on my order block indicator, I noticed that there are imbalances that previous price actually created. So let me see something here. Turn on my order block finder. Right. Give me 1 second. Let me pause this recording real quick. Okay, I'm back. So now in this situation, I turn on my order block indicator and I look at imbalances in the market, number one. But then what I also do as well is I also look at the previous move that the institutions performed. So when I look at this move here, sometimes I kind of go back, like there's a huge imbalance move here, there's a huge one here. So then I ask myself, I say, for example, with this move here, when price shot all the way down and created this imbalance, have they already came back and mitigated this area? Yes, they did. And then when you look at this imbalance move here as well, did they come back and mitigate this area? Yes, they did, and so on and so forth. So when I look at this most recent move here, I ask myself, okay, did they come back and mitigate this area? They did. So then I see that it's a possibility that they might actually sell price down. Well, not necessarily, because price bought up here and they mitigated this area as well. You see, they bought it down to mitigate this area, and then they bought it up and to mitigate this move. So then when they bought it down again, they use it to mitigate this move again, and so on and so forth. So then I say, okay, well then maybe it's a possibility, since they did this move here, they came back and mitigate this area, it's a possibility that they still might sell this imbalance here. Now they did mitigate half of this area here, but they might bring it down to mitigate the rest of this area. So what I do is I go ahead and do my risk to reward tool for the sell. Okay. So I set it here. And I picture that I actually put a horizontal line here. So then I look at this as my second take profit. So take profit 1 down here, take profit 2 right here close to the horizontal line, and then I take this out. Okay. So that way it's a possibility they might mitigate the rest of this, because even though they got half of this, they didn't really get all of this, but they might do that. Now, the next thing I do is I try to go back in price as well. And I noticed that there's a lot of imbalance up here. So I'm asking myself, what major move in the past caused all this imbalance, all of this here? Okay, so you can see that they came back and medicated up to this point. So I would put a horizontal line here and say, okay, they came this far to mitigate this previous move that caused a huge imbalance move. Okay, so then I would erase it and say, okay, so then more likely if they're going to buy, I'm looking for them to at least come up to this point here. So if that's the case, I put a horizontal line there. And then let me do this and try to zoom in the chart. So then what I do is when I see that horizontal line up here, okay, turn this off, then that's when I put my risk to reward tool for the buy. And I'm looking to put my first take profit because I try to get at least 10 pips worth of NAS. So this is more than enough. So this would be take profit 1 up here. And then I'll be looking for them to go at least this high, maybe even higher. So then once I do that, I take this out and put my take profit here in the horizontal way. All right, and that's what I do. Then the very next thing I do is turn on the order block finder, because then I see that there's an order block here that initiated this. So in this case, I probably would conclude that they probably would come back down and maybe mitigate half of this area and then bring price back up, possibly. Now they already medicated half of this move. The question is, will they medicate the rest of this or just forget about it? We don't know. So I would see there's a possibility they would come down and mitigate this area and then decide to go back up and get that imbalance up there. So with that being said, what I would do is, so then first, let's see if I can do something. Pause this recording real quick. Okay, I'm back. I was able to get my screen to fit. Okay, so this is what I'm looking at. So then at this point, I'm looking for price to either sell and fill half of this imbalance here and maybe get a small move here, or I'm looking for price to buy up and fill all that imbalance and get a huge buy. Okay, that's what I'm looking for. Now, the very next thing I do is turn on the Delorean EMA indicator. And I always use this indicator as extra confirmation on top of my analysis when I'm trading institution, okay? So anytime when the yellow EMA crosses the red EMA and it's above the 50 EMA as well, then more likely I'm thinking it's going to buy, depending on the position. So you can see that here, that it kind of crossed up and did a strong buy here. Whereas right here, you can see that the yellow EMA crossed the red EMA and it did a huge sell, and especially when it went below the blue EMA, okay? So then that's what I do. And then basically I set my alarm for my take profit zones, and then I wait for the 9:30 bell. Now I'm going to show you guys exactly what happened step by step, and then also what I profited from this trade. So let me go ahead and I'm going to be pressing the replay here. So notice they start to bring price down, probably from this previous move. I'm going to turn off the Delorean EMA indicator so you can see. So they probably brought price down halfway to fill this area. See that? Really, you can see all of this here. This was a huge imbalanced move. There was a sell order that didn't get filled, so they had to mitigate this area. So I could have put a horizontal line here and to say they're going to come back and maybe come down here and then reverse it up. Okay, let's see if they did. They did that because now price shot straight, reverse and shot straight up. Now, so that's understandable because this is the most recent imbalanced move here. I'm going to circle it again. The most recent imbalanced move right here. So that's why they came back down and medicated half of this. So now they're thinking, okay, we medicated this area and made our money back. Now it's time to buy it up and get the rest of this imbalance so we can make our money back. Okay, that's what they're thinking. So now price instantly buys up all the way up to here. Now at this point, I probably would have adjusted. So hold on for a minute. By this point, I would have adjusted my break and retest lines here. So I probably would have, whoops, not that. I probably would have put my break and retest, I want to say maybe down here. So let me erase this here. Probably right there. The price is down there. And it broke. So now, turn this off here. So price broke and retest this line, I would have got into this sell here. I mean, into this buy here. Now keep in mind, when price dropped here, I got into this sell and I made my first profit. And I closed my first partial trade. So my first partial trade, this was a $49 profit off of this red candle. So what I'm going to actually do is I'm going to actually go back. So by now I had made $49 off of this candle, okay, because it's sold. I really want to say that I really got in up here and price broke and retest my line, but I'm just adjusting it. So I made $49, but then instantly price reversed up on me. And so when I got here, I suffered a $68 loss. So I made some money, but then I lost some. So I was about $15 in profit. But then when price pushed up to this point, I got back in. So I want to say I probably got back in maybe right here. Price went all the way up, 623 pips. So made $34 in that. But then price kind of reversed a little bit. And so then price kept on buying up and I jumped in, profited some more money. Now now here you see, I'm gonna rewind this. So you see how price went into a red candle before pushing up. So I was in -8, -$8. So I just closed that and suffered an $8 loss. Jumped back in and price went up some more pips. Okay. So now we're talking about a total of 1,400 pips. And that's where I made my $42. All right. And then closed my first partial trade and let my second partial trade run up to where I made $16. Price kind of reversed back down again, suffered a -$1 loss, and then I closed that because I got, kind of was a little bit jumpy and nervous, but then I said, no, let me jump in and get my money back. Price went up a little bit more here and made $24. So I gained an $88 profit off of that. And then that's when price just started to reverse and I got out the trade. Okay. Now I want to share my phone screen and show you my profits so you can see what I made with this. So give me a second here. All right, guys. So as you can see, out of that whole trade, I made $88.20 out of that, even with a couple of losses. So that's how I actually want to trade this morning. But I did a back testing session just to kind of, add some new strategies when I'm doing my top-down analysis. So that's what I wanted to show you guys. So let me share my main screen here. So moral of the story is one of the things that I try to look for. So let me actually just clear everything. Turn off my indicator. We won't go straight naked chart. So moral of the story is when I go all the way back to when price first started, where current price was before I really started doing anything, I try to look at the most recent imbalance move. So I can see that, price pulled back here, so it did mitigate half of this area. I try to look at the most recent up move to the upside, because then I'm looking and saying, okay, they mitigated half of this imbalance candle here, but they still got all this. So they're probably going to bring it down maybe halfway to get it and then go up. That's what kind of happened there. So if I put it even right here, so they might come back down here. Look what they did. They had to mitigate at least half of this imbalance candle here. Then they decided to shoot it up. Right now, let's look at another example, and then I'm going to wrap this up because this is very important. Change this real quick. This is very important. So, like, even let's say we jumped in. Let's say right here. The very first thing I'm looking at is, okay, this is the most recent imbalance move here. Okay. So I definitely will look at that as the institutions putting in this order, because price sold down so fast and so hard. It has to be somebody with a lot of money that put in that sell order. So then I asked myself, has this been medicated at least half of it? Right? No. So when I turn on my order block indicator, I see all this imbalance here. I'm thinking, okay, we're either going to bring price up to this point or to this point. So I'm just betting they're probably going to bring price up to this point. So I use this as a selling opportunity and say, okay, well, it probably might buy. So then what I'm going to do is I'm going to set up for a buy. Stop loss here. Probably entry here. Trying to get 10 pips worth of NAS. I'm setting my TP1 here. This is going to be my TP2. period. And so then this is going to be a total of 2,900 pips of NAS. Let's see what happens, and then we'll in this session. Smash first take profit, definitely. Smash second take profit. See, they end up medicating most of this area. And so when I pause this, matter of fact, let me go back to when, see, where I put my horizontal line. Everybody said they probably gonna bring it up at least to this point. They even went a little bit higher, and they did. So you kind of just have to look at the most recent imbalance move and then ask yourself, have they medicated at least half or most of that area? If not, then there's a huge chance that they might actually send price to that area. So whether that's a buy or a sell, then you'll know. So like perfect example now, you see they did a huge imbalance here. So have they medicated this area yet? No. So I'm probably thinking they're going to probably at least bring price halfway to here. But this is where I will probably put a horizontal line here. And then I want to erase this. In fact, I want to erase all of it. Then I would think they would at least mitigate half of this area. And then I will put in sell. Entry. This probably be TP2. Let's see if it goes that direction. I mean, they could do that. And the reason why I'm thinking they could do that is because they already mitigated half of this imbalance here. So they might finish doing that first before finishing and going up to here. So let's see if they do that. We'll see. So you hit a lot of that liquidity up there, but now it's starting to come down. Yep, yep. Yep, see what I'm saying? Very close to this horizontal line, so close, 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 still close. They close, very close, down to here. Now I look at this most recent move. They have mitigated half of this, but they might bring it down further to sell this off and then go down further. Let's just see. So I'm thinking maybe at least to maybe right here. Let's see. See that? See that? Yeah, there you go. We're past that. But then, you know, they might say, hey, we need to get this as well. So let's drop it down and cover all of this. That way we're done. So let's see if they do that. Bring it down to here. At least maybe down to here, at least, maybe even more. I'm just curious if it does that. And then if it does, then there we go. And then we'll just end this session. See that? Told you. Bam, you went past it. Yep. So yeah, so that's it for this back testing session. This is just a little bit away on how to trade institutions, you know, trading, which is very, very important to be more consistent in the market. All right, guys, so that's it for this back testing session. I'll see you guys next time. Take care.